Hello and welcome back to another episode of Lexicon Crypto. We're excited that you are here. We have a wonderful guest for you today. Derek Bobbitt is the founder of Coinalytica, a crypto business analytics startup. He's a junior at UNH studying finance, information systems, and business analytics. And outside of school, he is a principal at the Rines Angel Investment Fund and the president of the UNH Entrepreneurship Club, where he hopes to foster the next generation of collegiate grad founders and mentor them through the Shaw Innovation Explorer and Paul Scholar programs. Derek, thank you for taking the time, and welcome to Lexicon Crypto.
Thanks for having me on. I appreciate it.
So that bio has there's a lot of big names in that bio. Would you mind just breaking some of that down for us? Tell us a little bit, like what's the Shaw Innovation Explorer and Paul Scholar? What are some of these names?
Yeah, so the biggest thing is I'm currently at the University of New Hampshire. I'm a junior. And I guess I could start from the top. The Rines Angel Investment Fund is actually the first undergraduate-run angel investment fund in the United States. Now, we're not the only one anymore. More universities have built them, but we were the first. So we've been, investing in startups for the past 7 years. So It's been really interesting to get that experience from the investor side, where it's like, what does it mean to invest in companies? What do we look for in founders? And coming at entrepreneurship from that investor perspective, but also being able to bring my own personal founder perspective to our investments is something that's really unique, especially at the undergraduate level. And On campus, there's the UNH Entrepreneurship Center, so we call it the E-Center, and that is basically the hub for everything. We run the Shaw Innovation Explorers. We've had past alumni give massive donations that allow us to bring students to all kinds of different startups throughout the New England area, learn more about massive areas, especially when it comes to retail. And we actually had one group go out and do lobster fishing, just a hands-on experience of what is the industry like in Maine and that kind of reflection and hands-on activities. So it's really interesting that we're able to provide those kinds of experiences to undergrads. And again, that's thanks to the generous donors that we have and alumni. But also the Paul Scholar program, that's more of the business school, and that's working with students who are coming from a higher end education where they had straight A's in high school, but what is it now that in college? Like, how do we get you involved where it's not just the grade, but what are you involved in on campus? What are the extracurriculars you're involved in? And it's really just trying to foster that community that we have on campus where we're trying to get people more involved past just classes and the straight 9 to 5 of education.
Yeah. So it sounds like you're very busy. You're a founder, obviously, of Coinalytica, which I'm excited to talk about. You're participating in a lot of these extracurricular groups. You're obviously a student, so you've got your own requirements. How do you find the time? How do you manage all of those responsibilities?
Arnold Schwarzenegger said it the best. I just sleep faster. But honestly,
there you go.
It comes to, I do time block a lot. And one thing a lot of my friends note is that I am just like a productivity hacker. Like, I use Notion religiously. If you look at my daily calendar, I time block everything from assignments. And I'm very much a data-driven person. So I kind of goes into why I started Coinalytica. But I just analyze everything where it comes to like, how much time does it take me to finish this assignment? So I can really almost project what everything is going to be, and it really keeps me on track and allows me to make the most of my time. But I'm a student as well. You have to make time for having some fun and hang with friends and not always working, which is definitely something I've had to work on the past 2 years.
So talk to us about Coinalytica. Obviously, we're a crypto show, so we're interested in kind of how did you get started in crypto? What has your background been? And then where did this idea for Coinalytica come from, and where are you guys at in the process?
Yeah, so Coinalytica is the first business analytics crypto, I would say, venture. And think about the easiest way I explain it to people is think about Google Analytics for Web3 companies. One thing we saw in the past bull run is the actual development of business models, not just, I'm releasing a token, I'm releasing an NFT. It's the actual development of business models that are like DeFi protocols or entire collections that focus on monetizing their community. And one thing we'll see, especially in Web 2, you think about e-commerce. They have everything when it comes to analytics. It's not just revenue and fees, the basics, but we see user interaction. We can see user visits versus user churn. We can tell who's repeating users, who isn't. And the reality is all that data is super important to growing a business. And that's something that people talk about, how do you make a sustainable crypto business? The first thing is back to basics. How do you have to analyze your business and get the right metrics in order to grow it? So that's a need that we saw in the market. And we started out with some customer discovery, starting out with like, what metrics are you currently measuring? And when we talked with founders of NFT collections that have 8 million or more in sales in their first release, they were tracking nothing. And there was a ton of founders who had no analytics on their communities. And the basic, I guess I would say the most technical people would actually go onto Etherscan and scroll through every transaction they could and manually go through and try to figure out who are their customers, which again, in an anonymous world where it's just a wallet address, there's only a limited amount that you can figure out from your users in a singular context of looking at a singular wallet. So by looking at this consumer data and also the business data in aggregate, I would say, think of it as like the dashboard that you see with Google Analytics, you can get a lot more insights. And there are some insights that we've actually made an entire new class of metrics you can track that actually haven't even been done for Web2 companies. So simple things like with Web3, we can now tell you what the average purchasing power of your community is.
Right.
You can, if you want to look at of the users that have joined your or connected their wallets or joined your program or your protocol in the past month, how many of them have actually participated in public mints? What does the average consumer look like? And that's in data that is so necessary for crypto businesses that, again, it's a need that hasn't been fulfilled. So we're really excited to be digging into that market.
Yeah, definitely. So tell me, how are you guys bridging the gap from a wallet address to appending data? And is there that traditional Web3 mentality where the user owns their data and you're giving them a way to monetize that? Or is it entirely just focused on like reporting dashboards of publicly available data?
So we like to say that we are a Web2 company that services Web3 companies because, again, at the end of the day, our experience has always been Web3. I've been trading in crypto for, I would assert myself as not an expert. I'm a youngin'. I've been in crypto for probably 3-4 years now. So it's really coming down to when it comes to principles. And one, I guess the best way I can explain it is we have one feature called Audience Map. And Audience Map is basically the first way that we're actually able to give user locations based on wallet data that we're able to parse. And one of the big issues that we ran into is, okay, how do we champion data privacy and user privacy in this world? You can get so much data. And that was actually one of my first startups was actually a data privacy social media. So I've always been proactive when it comes to that. I want to protect users. I don't want to be invasive. So I was looking at like, we have Web3 principles. We want to promote user anonymity and we do not want to invade on their anonymity or privacy. We capped it where it's like we could get as specific as to say this wallet is in this location, but we said we are only going to look at wallet location data or anything that's user related in aggregate. You can never look at a specific user's data point when it comes to location and that kind of thing. So when we spoke to a lot of our customers, that really resonated with them. And that's the reason why a lot of people are already on our case study list. Because again, we are expanding that currently, trying to really find, make sure our product is serving their needs. And that is the reason that a lot of people are starting to work with us is because we have the speed of a Web2 company, but we keep those Web3 principles at the core of all of our values.
Yeah, no, that's very cool. I think those are things that will resonate with Web3 customers and things like that. So I think that's hugely important. So what's the future of Coinalytica? Like, where do you see that going? Who are potentially even some of your kind of ideal customers?
Yeah, so ideal customers are definitely DEXs and decentralized exchanges, depending on your audience. So the best way to look at it is we can get as specific when it comes to some of these larger businesses. Our entire model is based upon you make money, we make money. So we have a very much a value-based SaaS approach where, for every $1 million we record in data, and that's parsing data and getting the data analytics, we get paid $100. So when you look at that on a grand scale, some of these DEXs, we are a very cheap solution, especially for even smaller protocols. So coming from that angle, we can definitely get a lot of data out to the market and especially to our customers. So the ideal customers, especially DEXs, because they have larger value, especially when it comes to our business, that's how we're going to make the most money. Yeah. But also when you look at it, we can provide specialized queries. So if we're getting to the more of the data analytics side of things, but say a DEX, one of the biggest issues currently, they want to offer a new token. They say, oh, X token seems to be a new big thing. Should we offer liquidity for that token? And the current way they go about it is they do research on the company. They try to see on Etherscan how many users there are, and they're trying to figure out what's the market potential. We offer a simple solution where it's as simple as we plug in, you write a quick query where it's like, how many users, you could say, in the past month that have interacted with our decentralized exchange own this token? And we can give you data on how many tokens in total they own, how often they trade that token, and immediately you get the entire addressable market for that one token offering, which is huge for decentralized exchanges. So that's a massive pain point that we're solving right off the bat with a very simple solution. So
Yeah.
that should probably get to your question.
Yeah, no, that's perfect. I think it's hugely important, obviously, from a market perspective, understanding who's out there, understanding, are these high net worth individuals, are these active traders, right? Like, you can really create profiles based upon their on-chain activity. So I think it makes a ton of sense that you guys would aggregate that into dashboards. I can imagine directors of strategy and ecosystem development teams, others really resonating with the data that would be generated. So that's very cool. Very cool. So you're wearing a Stellar t-shirt though. So is this your
Yeah.
sign of are you a fanboy of Stellar?
So that's the thing. So this is actually has a backstory to it. The first time I really got involved with, I would say, building my network in the professional crypto space, where it's like meeting people as part of protocols, I went to South by Southwest this past spring.
Yeah.
And of course I had to get all the crypto merch. So I have the hats, I have Filecoin socks, I have Stellar shirts, and I even have a t-shirt that says decentralize everything from Draper Universities. So it was like, I have all the merch. So honestly, you'll see me on a daily wearing some of these shirts, but Stellar Lumen specifically, I think that they definitely have a lot of potential, especially with their ecosystem development. I met their director of ecosystems at South by Southwest. So just looking at where they're going in the future, I think sustainability and especially some of the scalability that they're looking at with some of their new upgrades it's definitely going to be industry changing.
Yeah, no, definitely. I'm a huge fan of Stellar. I have been from the very beginning. Their whole mission and vision from the very beginning just really resonated with me, thinking about the world of the unbanked and trying to help them get on chain and start to give them financial tools to be able to create their own future. That is, I don't even know, there's not even a value to the potential behind that. And I've always really been a huge fan. So when I saw the logo, I had to call it out. So talk to me about some of your other activities. Are you currently engaged in, perhaps through your angel group or others, are you guys currently evaluating other Web3 companies? And what are some of the trends that you're potentially seeing in startup Web3, even really coming from the college scene?
Yeah, so looking at from where we're at with the Rines Fund, we very much have a generalist approach. We are looking at, hey, we're going to invest in any company that comes our way that we see as a valuable company that we want in our portfolio. So we're not specifically looking at Web3 companies, not specifically looking at agri-tech or any other sort of industry sector. So it's more about the education side. And that's one thing I like to tell a lot of people about Rines is it's not always about trying to see the most amount of pitches, trying to get the most value out of things, because one of the focuses that we have and something that we like to talk to founders a lot about is we have a month-long process with founders from pitch to investment decision, which is a long time when you look at the industry as a whole. And the reason that we do that is we do very in-depth research. And I've worked with VCs that are in professional circles, and the amount of research that we do even as undergrads sometimes is way more in-depth. And that's because we have that longer time horizon between those decisions. And what we give is at the end of that entire cycle, we actually give our due diligence report to the founders. So that's one, a learning experience for them, and also allows them to say, hey, here's something maybe you should look into that we found in your industry, something you should probably look into for your business model. What about your pricing strategy? Here's some of the data points they found in the industry that's possibly something that could help you build that out. So it's way more of education for us, but we also are trying to provide the education to the founders as well.
Yeah.
So I've always loved that kind of give and take style where it's not just pitch to us. If we like you, come back, then we'll do more in-depth analysis. It's very much like, you pitched us and we're going to give you all this research that can help you with your business. And then if you have a great business and we like the analysis we've done and we come to an investment thesis that we want to invest, you can join our portfolio as well.
Yeah, no, that's super cool. Only a student from UNH would call out agri-tech as a random category off the top of their heads. That was
Hey, actually, you'd be surprised. I was out at an accelerator this past summer out in California, and agri-tech was the largest sector of the entire accelerator. Yeah. And that was a generalist sector. So I see a lot of things. So I have a lot of friends that, are from LatAm, and actually you'd be surprised, even Eastern Europe. And they're doing a ton of work in agri-tech. There's a lot of new startups and newer things that are coming out, because agriculture is not an industry that is getting off crypto, but it's not an industry that's been very disrupted in the past few decades. So it's really interesting some of the stuff that's coming out.
Right. Yeah. No, that's very cool. So what are some of the trends that you're seeing from a Web3 perspective? Are there tools, or as the industry starts to evolve, are there things that you're seeing that are catching your attention more than others? Or where do you think the industry is at this stage?
One thing is everyone says we're early. I think we're in the middle of we're early and we're late. So we've definitely seen a lot when it comes to adoption, and we still have a lot of potential when it comes to mass adoption. So I think that as far as people talk about the hockey stick, we're really getting close to that inflection curve, and I would even say inside that inflection curve right now. But as far as trends that I'm seeing, biggest things is stablecoins. I know a ton of founders that work inside of stablecoins. If you think about stablecoins, especially on the Bitcoin network with Coin on Lightning, if you guys know Atomic Finance, that is definitely a trend that I see starting to emerge a lot more, where people are starting to DeFi on Bitcoin. Yeah. And when you think about even just, I'm not a Bitcoin maxi, I'll say that from the beginning, but at this rate, Bitcoin is the largest held cryptocurrency with the largest value, has the most market share. Yeah. A lot of the tools that go into developing that network is just going to benefit the entire ecosystem as a whole. Yeah. So I see that as a massive trend this year. I think DAOs have a lot of potential. And that's one thing that I've been looking at for the past 2 years, especially, is DAOs when it comes to decision making, when it comes to governance. We could get into the nitty gritty, nerdy stuff where it's like quadratic voting versus other types of voting structures. But I think the innovation that comes with governance and really diving into that has a lot of potential outside of just crypto. We can talk about uses in government. We can talk about uses even on the side of, we could talk about the environmental agencies, especially in the government, how they make decisions and how that affects communities and how communities can get more involved. So I think when it comes to community involvement and innovation, when it comes to decision making, I think DAOs have a lot of potential there. So that's a big trend I'm looking at.
So let me jump in on DAOs real quick, and then we'll go to the next one. But imagine, even just as an example, like a university moving their endowment into a DAO. And imagine giving alumni, or if you're a student, you immediately become a member of and as an alumni or something like that, right? Like you actually have voting rights, and there's a governance structure that's placed inside of that university. How radical of a change and how empowering that would be, that this place that you're investing so much into, you actually have a long-term lasting investment. I think that's...
Are you reading out my idea journal? Because I have that word for word in my idea journal that I came up with a few months ago. That I was this will be huge. The biggest thing that this kind of goes into the next idea I was looking at is there's a lot of potential, especially when it comes universities, governance. The problem that we're going to run into is it is so hard to change those legacy systems.
Oh, yeah.
And trying to convince a college endowment board, we've had enough trouble trying to convince our endowment board to invest in ESG. Trying to transfer them to a DAO, I would say that is definitely down the line. I would say that's 5 to 10 years before people even start looking at that, especially at the university level. And this kind of gets to the next idea, where I think that right now, and the biggest trend is, the way I look at it, is Web 2.5. People talk about Web 5. I don't look at that because I think that totally goes against the idea of the generation of the internet. But Web 2.5, there's an in-between, full decentralization, the initial principles that personally got me interested in the industry overall, because I started out as crypto. I can make swing trades and day trade for 60%. I came from a finance background. That was prime real estate for me to make money. And I came for the money. I stayed for the principles, where it's I started learning about centralization, started learning about what does this actually mean. And I was like, wow, this is actually really cool. Yeah. So that's why I decided to work more into this industry. But I think there's a place between Web 2.5, because Web 2 has scalability that is just, we still have to give credit where it's due to some of these tech companies, because the scalability is unmatched. The ability to get things out to customers, the ability to parse through massive amounts of data and to come to insights is you can't match that, especially with decentralized systems currently. So I think as of right now, what you're going to see a trend about is Web3 on the back end as far as principles and the goals of serving Web3 communities, but through a lens of a mix of Web2 scalability and Web3 decentralization. And again, that's why we look at it with Coinalytica. Coinalytica is a Web 2.5 company. We're a Web 2 company that services Web 3 solutions to encourage that growth of that final third generation.
I think true Web 3 companies right now are on I think that's what the story of the metaverses. And you've seen over the last couple of weeks, there are reports, they did this huge metaverse and there's 18 users or 25 users or something.
Yeah, the daily active users was a big hit.
Yeah, and I read that story and I was just like, I get it, but it's because they are on an island, like you're saying, they've there's a step that's missing in between here and there. And that's what 2.5 is building. 2.5 has to be the infrastructure. And that's like the conversation with Luca.
Yeah.
Institutional dollars won't come into crypto until they have the right pipes in place in order to be able to manage it and align with regulation. And like they have to go through these processes, and the tools are just barely being built to help to facilitate that. Coinalytica, there's a whole list of anyone who's building any infrastructure who can help to bridge the gap today. Those are the companies that are going to be growing and excelling. While Web3 continues to build, totally speculative, wildly speculative, trying to guess where everything is. I think that there's this whole piece, and that's why. I think that's why stablecoins at this moment are the piece that's resonating. It's because you're getting a bridge between these two worlds. Like anything that starts to build between the worlds, all of a sudden starts to become really valuable. So I think that's the exciting part of where we're at. I would actually, your hockey stick analogy, I would actually say we're a little bit early than that. So I'm one of the early guys. So I think that infrastructure, I think that vision is there for it. Application execution certainly isn't there. And just because you can create a metaverse doesn't mean you've created Web3. And
more people need to hear that.
Yeah, and even the reality of you've created a cryptocurrency, it doesn't have any real world application or real world use, or it's still very speculative on that side. So I think that while there has certainly been some adoption, there hasn't necessarily been adoption to a point of I'm adopting this because it's useful for me in my life. It's been adoption for exactly your point, which is I can trade this on speculation, and so I'm here for that. What's being built right now is that 2.5. I think once people start moving from leveraging 2.5, start moving from 2 to 3 through that gateway, and start building on top of these things, I think that's when that hockey stick starts to occur. But I still think
can I ask you a question?
Sure. Ask away.
So what do you think is the end all be all for Web3? What does the market look like? Because I have my own theory about this where I think that Web3 is going to be a niche market and it's not going to be for everyone. But I want to see, what do you think of that before I get into that?
So it depends on, of course, how we define Web3. But yep. I actually believe that we're essentially going to skip over Web3. Web3 is going to be known as the failed metaverse. And I think we're going to actually move very quickly forward. So there's a couple of things happening. Quantum computing is happening at a very accelerated rate right now. And so I think that like the exponential growth of that quantum space with the growth of blockchain. And I see some articles about it has to be one or the other. And I don't understand that mentality. I think they actually work very well together. What do you need to run a blockchain? A supercomputer. So like, why not? You know what I mean? There's going to be overlap here. There's going to be ways to facilitate this. I do think that the ultimate value, the ultimate like killer use case for blockchain is a transfer of value. Now, that doesn't have to be currency. And that, I think, is the next evolution of where we're going, where we're going to be able to transfer value in a way that isn't tied to dollars. And right now, the regulation, even this, we're stuck in this idea of what's it worth? What's it worth? What's it worth in dollars? And really, you know what? I want to trade an NFT for an NFT. What if I wanted to trade an NFT that I have with someone else's? Does it have to be tied to value? Like, does it have to be tied to some sort of like dollar amount? I don't think it does. So anyways, I think that there's going to be ultimately that level where we get to at a humongous level, a global level, cryptocurrency and the evolution of it. Today, $3 trillion market cap globally totally devastates the world's financial markets. All of the financial regulators today, IMF, World Bank, Federal Reserve, everybody, the EU, UK, everybody is saying how dangerous essentially DeFi is. And their play right now is, it's used by criminals because they don't know what to do with it. The reality is it's completely destroying the entire financial foundation of the entire global financial system. It is absolutely eviscerating it. No one wants to admit that. But why is every single major company, every institutional company, everybody moving into cryptocurrency, into DeFi, into that space. Just yesterday, Citadel and several other companies opened a new exchange. Like it's happening. NASDAQ opening exchange, New York Stock Exchange exploring how they can enter into the exchange space. Everybody knows that this is what's going to happen and where it's going. What that does is destabilize. And actually what it ends up hurting the most is the US dollar. World is pinned today on the US dollar. There's going to have to be a new world reserve currency. I believe that will have to be done by the IMF. The IMF will be forced to choose a virtual or digital currency. It'll come out in the form of a CBDC. It'll be issued by the IMF, by the World Bank. Individual countries will pick that up. It'll be issued as a US CBDC, but it will ultimately be backed by the IMF, by the world, essentially the world's global economy. That will be the coin or the basis that every stable coin will be based on. You can pin that one-to-one. You have the world government's backing on it. And that's going to be essentially the foundation for the new world financial system. I don't see in my mind like how you get around that. And to me, that ties in identity, that ties in financial, it ties in goods, it ties in property ownership. So like that you've jumped over Web3 in the way that we know Web3 today into a world where it just underpins really everything that we do. Long answer.
Yeah. I think you're totally spot on with that as your assessment. I think that because that's the thing where I was looking at where it's what is Web3 going to look like? I think that I'm not sure if I'd call it the failed metaverse like era. I think there's going to be a lot of things that are going to hit the market and find product market fit. But the eventual thing, quantum computing, that's the biggest thing we're looking at. If you can parse like all day, you can run a blockchain more efficiently. There are so many benefits where you see those emerging technologies. And I think the biggest thing you hit on there was the trading of value. And one of my friends, they were like, how can I buy this product and, for this product when there's no dollar equivalent? And I'm like, how do people used to trade pelts and furs back in the days when bartering systems? The reality is value is completely subjective. Why does someone choose to buy a Pokemon card for $100,000 when its intrinsic value, quote unquote, is a piece of cardboard? That is the thing that a lot of people have. And I'm actually personally in the trading card space, so I think it's really fun to have those kinds of conversations. But the reality is value subjective. What someone is willing to purchase for something, at the end of the day, at the very baseline, markets are buyers and sellers. There has to be someone who wants to buy something, has to be someone who wants to sell something. So if you really go back to basics, and I think that you're totally spot on where there's not going to be a dollar equivalent. I think that for the majority of the market, there usually will be at least something to tie the value to, because that just makes ease of commerce happen. Yeah. But I think the actual value trading, like the NFT for NFT, that is exactly where this stuff is going, especially when you think of retail trading.
It's interesting that think about how Zillow and Redfin have played a significant role in the real estate market. Every month now, I get an email from Zillow that tells me what my house is worth. But before that happened, I was just saying to myself, like, I hope I have some equity, but unless I do an appraisal, I don't know. And you would list it on the real estate market, and somebody would come to you and say, no, I'm going to give you less than that or more than that. Like, it's totally subjective. Now sellers are coming in and going, look at Zillow says this is how much it's worth. And we can have our own conversation about how they are determining their algorithm and how they're also buying billions of dollars worth of homes. But that's a different story for another day. But I think that like the idea that there has to be a dollar value on stuff actually artificially drives a market in a dangerous. You put a dollar sign on a NFT. Right? Suddenly it's, that's worth 10 ETH. The guy who made it is going like 10 ETH. Like, I literally like spit at the screen and that's what came up. I don't know what? Yeah. But once that happens, and the next guy goes, mine's as good as that. So mine's worth 10 ETH. And it creates this like artificial, it's not tied to real value, right? It's just this like artificial speculative kind of thing, which is where the market's at. And yes, it's cooled off, but that's what was literally driving that whole thing.
It was a snowball.
It is. When that stops happening and we start to change to real exchanges of value outside of the individual dollar amount, suddenly like value starts to become much more real and much more tangible. So I want to trade this NFT with you because my family needs meat and I have eggs. Right? That's a trade that I'm willing to make. Somebody out there in the world might pay $1 billion for this meat, But right now, I need it, and you need this. You need what I have. So there's an exchange that needs to occur of real value. And so that, I think, if we remove, long story short, that's, I think, ultimately where things are going to begin to continue to move in a really useful way, in a helpful way. Oh,
Yeah, that's
yeah,
interesting.
dude. Yeah, man, you got me all off on a rant about that.
No, it's awesome. I love hearing about where people are looking at the industry.
Yeah, no, it's super interesting. And I think it's really interesting from a founder's perspective, like trying to find a space and trying to find a use case and thinking about how you can build something that can fit into the market need. And certainly what you guys are doing at Coinalytica and how you're building it, I think is super cool. And it's exciting to see how you guys are doing it. Really appreciate, Derek, really appreciate you taking the time to come on the show and to talk with us. We went way farther afield than I had imagined we were going to go today, but dude, super cool. Really enjoyed it. And would love to have you back on as things continue to progress, as you continue to navigate this crazy world that we're in right now. Please let us know. How can my listeners connect with you, and where could they find out more information?
Best thing is I'm all over LinkedIn. If you guys look up my name, Derek Bobbitt, you'll see Coinalytica on my page. You can go follow the company page. It's still very new. Again, we are pre-MVP. We're still in the stealth mode when it comes to actual technology. But if you guys want to get in early, follow us and stay more involved. Always happy to have a chat with someone in the industry. So feel free to reach out.
Great. Derek, thank you so much. And that's a wrap for our episode today, Lexicon Crypto. We look forward to your questions, comments. If there's anything that you're curious about, have questions about, please make sure you comment in whatever platform that you're listening on. They all facilitate comments. We'd love to hear from you. You can visit us at www.lexiconcrypto.com, and we will see you next time.